And again, I'm looking at the Market Scanner Pro, and just a visual quick look tells me that, first of all, Bitcoin expires at midnight today, so careful if you're planning long trades or any trades, of course. And natural gas expires in 2 days, so caution there if you are looking at that market for any potential trades. Otherwise, cotton, giant move to the upside. We have a 1 hour on it. We'll get to it in a minute. And also ZL made a giant move to the upside here today. Also RB, especially ZL. So the usefulness of the triple R indicator is that it measures everything in standard deviation, which means a little different from the human eye. So if you look at this market here, yes, it is a big green bar today, but it doesn't really stand out. It's easy to miss visually if you just look at it. But in standard deviation, this is a giant move and an important event in the market. So this column always tells you in objective ways which markets have made a significant move. So for example, here's the RB, and this is on the daily chart for me. In this case, it's more apparent. You see this green bar, obviously, it's a big move. So sometimes it shows visually for the human eye, sometimes it's not really. And this, however, is always objective. The next column is inside bar. As we know, inside bar is a bar which is smaller than yesterday's, and that usually leads to a breakout from the range of the previous day. In other words, this is worth looking at because it might offer us excellent breakout trade opportunities. Hot zone, as we know, the rule is for us that the first pullback in the hot zone is a potentially good one. Actually, not just potentially, but usually a good one. And as you can see on currencies, we have bearish hot zones. I'll just look at, let's say, the Canadian dollar. Bearish hot zone. If there's a bear flag in this zone, that bear flag must be taken seriously. And to new users, what is a hot zone? Is simply when our indicator, triple R indicator with the 2020 setting, which is the persistent momentum measurement for us, crosses below zero. You see, this is where the hot zone begins. And again, just for new users, it's possible with the triple R indicator to make this visible. I usually don't switch it on because I just want to keep my charts with a white background. But let me show it to you. If you so choose, relative returns, hot zones, show hot zones, and then you can show the hot zones. And you see that we are in a bearish hot zone. So this setup and setups similar to this are potentially very powerful to the downside, wherever the hot zone is going. So in this case, when it was blue, the bull flag, which was here, just check it out, just the last example. This was the bull flag coming out from a bullish hot zone. Look at this signal and look at what happened after. Same thing to the downside. Here is a bearish hot zone. And although we didn't get a signal here for some reason, but nonetheless, the move to the downside was significant. And here's an example. Nothing in trading is ever 100%. This was a bullish hot zone, which simply didn't go anywhere. And that's also part of life. But more often, much more than 50%, these are significant areas to watch out for. Again, on several currencies, we have bearish hot zones. So if you want to look at those, you can look for bearish setups, short trades. I will have 2 ideas here for you shortly in just a few minutes on currencies. This is how it goes. And then in more concrete terms, there's the setup. This is the immediate event before any potential triggers. So when we have a short setup, that means that there is actually already a bear flag on the chart. All right? And there's a bearish hot zone plus a bear flag. This is a powerful short signal here, for example, on ZB. This will not be on my list today because we're busy elsewhere. But if you look at the 4-hour chart, it's easy to see that potentially this is a great bear flag. All right? The only counter indication, and there's always one if you really want to look for it, is that this is a bull flag on the weekly chart. So the higher time frame is actually not really cooperating. That's why I will not include this on the list of the trade ideas for tomorrow's session. Okay, so by and large, this is how it goes. And the signal, when it finally shows up, in my case, on the 4-hour chart, but again, you can customize this on any time frame you want, then the long or short trigger will actually light up here. So you always know if you have a trigger on whichever instrument you want to look at, or whichever instrument you have on your list. Depending on your data feed in NinjaTrader, you can make this, of course, longer. And you can also include stocks or ETFs or FX or Bitcoin cryptos, anything you want, as long as it's in your data feed. And as to data feed, I'm not going to go into that now, but you have so many options in NinjaTrader, so just look around and decide what you want to trade and what you want to have on your list. But in this video, we're only looking at futures markets, and actually it's futures markets that drive the other markets. So the futures market information is useful for ETFs and other asset classes as well. Okay, so this is how it goes. And finally, just one word about the Keltner channel, the Keltner score. When this is bigger than 1 or less than -1, that just means that price is outside the Keltner, which means it has already made the move, which means that the trade normally or usually is already behind us. So don't go long from here. We have to wait for a pullback. Let's look at the cotton just for an example. So cotton is outside the Keltner on the daily chart. And in fact, it is, you see. That's why it's 1.0, and that's why this long trade is already behind us. And the same thing on the NQ. On the NQ, you might be in a long trade, in which case I think you're in a good trade on the daily. But just note that price is outside the upper Keltner, which is always good reason to take profits, at least partial profits. Why don't I include also the last column here once I mention them all? This is the Remek converter information, which actually converts risk into dollars. And the higher the number, the more risky the instrument is for trade. In other words, the more money you need on the account to trade this, because one ATR on the daily chart is this many dollars. And you can see that the NQ by far is the riskiest instrument to trade. And, well, sadly, many traders may not be aware of this fact, and they play around on the NQ not knowing that they're playing around with fire if the account is a bit too small for the job. So this is a relative measurement of risk as measured in US dollars in terms of one ATR on the daily time frame. Okay, so after this little introduction, let's look at the market as usual, and we're starting with the ES.